Well, let's get started. Good afternoon. It's a pleasure to have the opportunity to speak with you today about the Voluntary Compliance Program, which is administered by the Department of Commerce Division of Unclaimed Funds. My name is Kelly Lister, and I'm Division Counsel for Unclaimed Funds. I'm joined today by the Division's Compliance Manager, George Gladden.
Good afternoon, everyone. Thank you for joining us.
The primary purpose, the primary vision of unclaimed funds is to reunite owners with their lost and forgotten funds. Next slide, please. And the division has been able to successfully reunite a lot of owners with their funds. This past year, on average, we paid claim amounts in the amount of $1,606. In total, we paid close to 69,000 claims, which resulted in $111 million being returned to their owners. Next slide, please. So how do you claim your funds? It's what we like to believe is an easy and efficient process. First, you search for your funds. You can do that online 24 hours a day, 7 days a week on Missing Money or on the division's own website. There you can search using your name to locate funds that have been reported to belong to you. After you've identified those unclaimed funds properties, you can start to build a claim form. And that will, as you build the claim form, it'll be identified what required documentation you need to submit in support of your claim. And then you can upload your supporting documents online to the division for review and processing. Today, we're going to be talking first about the history of unclaimed funds to give you an idea of how it came to be, give you some information about the statutes that were put in place in Ohio, by which we administer the Ohio Unclaimed Funds Law. We're going to talk to you about holder reporting, which is how money comes into the custody of the Division of Unclaimed Funds. And then about due diligence, which is a process which holders must adhere to prior to reporting funds as unclaimed funds to the Department of Commerce. We'll talk about something called non-reports, reporting deadlines for holders, how to file an extension if you're unable to meet that deadline, what the consequences are in the event that the holders fail to file. And then most importantly, we're here to talk to you today about voluntary compliance agreements, breaking out for you what the requirements are, what the benefits are to participating in the program, how to go through the process, and what the agreement itself, the voluntary compliance agreement, looks like. And finally, we're going to provide you with some useful resources going forward that you can use to satisfy your reporting obligations, and finally answer any questions that you might have. Next, I'm going to turn this over. Next I'm going to talk to you about unclaimed funds. They're defined by statute in all 50 states. It's state law. There are some federal provisions in case law, but primarily unclaimed funds law is state-made law. In Ohio, unclaimed funds are defined to include any monies, rights to monies, or intangible property. We have a specific section in the revised code that deals with specific categories of unclaimed funds, such as bank accounts or checks or wages, and then identifies the corresponding period of dormancy that must pass before those dormant funds are properly reported as unclaimed funds to the Department of Commerce. Here you're going to see on the screen, on the slide before you, common categories of unclaimed funds that are reported to the division. When I say dormant funds, what that means is that there has been no owner-generated activity for a prescribed period of time. What kind of activity am I talking about? I'm talking about increasing or decreasing or adjusting the account balance, the amount in a particular account. Whether you've paid premiums or you've encumbered those funds, whether you've received a check or negotiated a check as payment on a particular account with a holder, whether you've corresponded with the holder of those funds in any way, whether it be in writing, by phone, or through electronic email. It's any way in which an owner otherwise indicates an interest or knowledge of funds which prevents a finding of dormancy, which after a certain period of time has expired will result in the determination that by law they are unclaimed funds properly reported to the Department of Commerce. Next slide, please. So I've referenced the Ohio Revised Code and Unclaimed Funds Law. It's found in Chapter 169, which was first enacted in 1968. It requires on an annual basis that all holders review their books and records. Potential holders of unclaimed funds review their books and records to identify funds in which they have no ownership interest, and at that time determine whether they are properly reportable as unclaimed funds to the Department of Commerce. It's an annual obligation, and irrespective about whether or not you locate funds belonging to a customer or to a business partner, you must the obligation is to review your books and records. And you can evidence that either through filing what's called a sum report, which indicates that you have located funds that belong to another that are properly reportable as unclaimed funds, or a none report, which we're going to talk about later, which just simply indicates that the holder has reviewed their books and records and identified that there is nothing properly reportable to the Department of Commerce as unclaimed funds. Next slide, please. So how do you report unclaimed funds to the Department of Commerce? We've broken it out into 3 easy steps. First, as with so many things, you first get the instructions, which will help you identify inactive or dormant accounts and determine if those accounts are properly reportable as unclaimed funds. And as I said, that's based on the nature of the funds, the category of unclaimed funds that you've identified, and the corresponding period of dormancy that is determined by statute, whether that period of time is passed, thereby triggering the report to the Department of Commerce. Once you've located that you are holding unclaimed funds that are properly reportable, you must first, as a condition precedent, before you, at least 30 days prior to reporting them to Commerce, engage in one last-ditch effort to correspond with the owner to advise them that you're holding dormant funds, and that if they fail to respond, either to request that they be returned to them or to indicate that yes, I'm aware that you are holding my funds, my account, and that I have a continuing interest in those funds. I want you to continue to hold them. Unless you get an owner response to that last-ditch notification, then it's properly reportable to the Department of Commerce. That notification must be sent out at least 30 days prior to reporting the funds to Commerce. So once you've sent out that due diligence notification, the owner has failed to respond and indicate that a continuing interest in the funds, then the holder will proceed and submit a report to the Department of Commerce identifying the funds that it holds, that it's turning over to the Department of Commerce to hold in trust. And also, correspondingly, you would remit those funds to the division. So there's both a report and remission of funds. And once those are reconciled, they will become claimable through the division, through the Department of Commerce and our searchable database, as I had mentioned earlier. Now I'm going to turn it over to our compliance manager, George Gladden, who is going to talk to you about the identification of dormant accounts.
Thank you, Kelly. All right. So as Kelly mentioned, all businesses, corporations, organizations operating in Ohio or located in Ohio, with the exception of 501c3 hospitals or political subdivisions, are required to report to the Ohio Division of Unclaimed Funds annually. Even if you have no unclaimed funds to report, as she mentioned, you're required to file what we call a negative or a none report. And so the first step of the process is to review your financial records at least annually to determine if you have anything dormant, anything that you might have been holding without any owner-generated activity. So the different kinds of unclaimed funds have different dormancy periods. For example, a refund check that hasn't been cashed for 3 years, that's still sitting in your outstanding checklist. Could be a checking account if you're a financial institution that hasn't had any owner-generated activity for 5 years. Patient credit being held by a physician where there's been no last date of service within the last 3 years or payment. Payroll checks, if it goes uncashed for 1 year. So for more information on that, you can visit our website, unclaimedfunds.ohio.gov, and there are some resources where you can go and download a reporting guide, and that has a list of the dormancy periods and different kinds of unclaimed funds in there. But the first step is to go through your financial records. And so you'll be looking at your outstanding checklists for those checks that are dormant or uncashed. Looking at your aging of accounts receivable report to look for any client credits that are older than 3 years. And once you go through and identify those items that are dormant, as Kelly mentioned, the next step is to do a due diligence mailing. It's only required for items $50 or more. Anything less than $50, you're not required to do the mailing. Those items are just reportable as unclaimed funds. You may do the mailing if you choose for those items, but it's not required by law. Everything else, anything over $50 or $50 or more, you're required to send out a notice of unclaimed funds form, and you can download this form from our website. We call it the OUF8. You can also generate your own form with the criteria listed in the instructions on that form. So you're required to send it to the last known address of the owner of the funds. Make sure you fill out the form, the top of the form, the middle of the form, identifying the kind of unclaimed fund, the account information, the check number, etc. And there's a place for them to sign toward the bottom there. And the most important is for you to provide your return address, because these notices need to come back to you so that you know whether or not these items are reportable. And so you are required to send these out first class mail for anything $50 up to $1,000. And you're required to send it with a self-addressed stamped envelope. Anything $1,000 or more, you're required to do the same, with the exception you're required to send it out certified mail with a return receipt requested, and you can charge up to $20 against the account to pay for the actual cost of the mailing. Now, if you have a bad address, then you're not required to do the mailing or send it out certified. And the way you document that is to show that you've sent them a first-class notice and it hasn't come back signed after 30 days, or if it does come back undeliverable, or if they don't respond, rather. If you've done a search for the available public records for their last known address and you can't confirm it, then you just need to document that, and you're relieved of the due diligence mailing. Now, we do sometimes get some questions about whether or not you can just email them or call them. And you are welcome to do that. You're welcome to contact your customers and your clients. But it is required right now by law for you to do the actual mailing for those items $50 or more. So then you're required to give them 30 days to respond. If they sign it and return it to you, that item is not unclaimed and it's not reportable, and you can either reissue the check or you can keep that credit on account for up to 3 more years if it's a patient credit or a customer credit before it becomes dormant again without any activity, and then you would be required to do the mailing. And so those items where you don't hear back after 30 days are reportable. And so then you complete your unclaimed fund report, and you go to our website, unclaimedfunds.ohio.gov. If you click on report funds, go to forms and resources and guides. And there are all kinds of videos out on our website, instructions, guides on how to report electronically. Now, if you go through and you review your financial records and you find that you have nothing that's dormant, you have nothing that's reportable, you are required to file what we call on the next page here a none. Sometimes we call it a zero report. You may hear us call it a negative report. So you do that also by going onto our website, unclaimedfunds.ohio.gov, click on Submit Funds, and then there's a section to go in to the none report and complete your none report online. It takes about 5 minutes. You can also do it through the Ohio Business Gateway, so that's up to you. And Kelly, I sense you have something you'd like to add.
You're correct, George. I just want to emphasize, I know in speaking with some holders, they don't quite understand the logic behind the none report, and I need to emphasize that there's an annual obligation on the part of all potential holders of unclaimed funds to review their books and records to identify these funds. Obviously, unclaimed funds law would mean nothing if there wasn't that corresponding obligation to look for unclaimed funds. So it is equally important to file the NUN report just as it is a sum report to show that you've done the due diligence, that you've reviewed your books and records, and that you're ensuring that you are not holding money in which you have no ownership interest. So for that reason, I think it's important that everybody recognize that each year the obligation isn't to file a sum report, it's to file either just to engage in that activity to make sure that on a regular and routine basis, you're identifying these funds in as close a proximity in time as you can to the point at which they reached um, their period of dormancy in which they've exceeded it. Because it's been our experience at the division, the closer in time to when people have lost track of their funds that you're able to begin to advertise them and make them available, the more likely that you are to locate them. The more time that passes, the harder it is to reunite owners with their funds. Thank you.
Thank you. All right. So your report, if we look at the next slide here, is due by November 1st for anything dormant as of June 30th of that year. So say, for instance, you had a refund check that was issued before June 30th of 2022, that would be reportable by November 1st this year if it was an unclaimed fund. There is an exception. The life insurance companies, because of their business model, their reports are due on May 1st for anything dormant as of December 31st. And if you are approaching that November 1st deadline and you find that you need more time, go to the next slide, please. You are able to file an extension by going to our website. There's a function under the report funds area, and you can request an extension online. As long as we receive it by November 1st, you automatically get it. You can request 30 days, 60 days, 90 days, or up to 120 days. And as long as we get that by November 1st, you have that time to complete your unclaimed fund report. We do recommend that if you're getting close to that November 1st deadline and maybe you didn't get your due diligence mailing out on time and you're still waiting to hear back, go ahead and request the extension. If you're not sure how long, then we recommend that you request the 120-day extension. It's better to take a little extra time and make sure that you're rather than having to go through the process of doing a corrected report or a holder reimbursement. All right, so what happens if you don't file? Well, you may be selected for an audit, and the authority that gives us that is revised code 169.03, section G, subsection 1. And so if you receive a letter from us advising you that you are under audit, it's not voluntary. It's required by law. And so one of our state auditors would reach out to you and then go through and walk you through that process, and they will review your financial records and determine anything that needs to be reported to us. And they'll answer any questions. They'll make it simple and easy as possible. But that is a possibility if you're not reporting. Another possibility is that you may be assessed fines and penalties up to $500 per day, and interest on those funds that should have been reported, and that's for each day that you haven't filed an unclaimed fund report. Now, the important word there in the statute is may. We do not automatically assess fines and penalties. We much prefer to educate and to work with the companies out there and advise them of their reporting responsibilities. But that is a possibility, and it's in the law, revised code 169.12 and 169.99. So some of you might be a little nervous in that you may not have ever filed before. You never knew you had to file before. You don't want any fines and penalties or be audited. We actually, and the reason that we are coming to you today and speaking with you is because we have a great program, and it's called the Voluntary Compliance Agreement Program. And it is a way to enter into a contract with the state of Ohio, whereby you agree to report all of your unclaimed funds from the past 10 years. And one of the benefits is that you are protected from fines and penalties. The state agrees, or the Department of Commerce agrees to waive the right to assess those. And there are some other benefits as well that Kelly will go through with you. But there are some requirements. One of the requirements of which is that you are not under audit by the division. So if you've received a letter from us or one of our contract auditors, then it's too late to do the voluntary compliance agreement. And you are required to conduct a self-examination of your accounts and to determine what your unclaimed funds liability is. You're required to make sure you do that due diligence mailing, and we'll go through that as part of the agreement as well. And then once you complete that agreement and send that in, once it's signed by the division, you have 60 days to report those funds to us. So one of the important things to remember is that this is a contract with the Department of Commerce. So you can't enter into the agreement, then change it or change your mind. Once you're in the contract, you're required to fulfill the obligations of the contract. Kelly, did you have anything you wanted to add?
Yes, I can only echo much of what you've already said, George, and that is that it is the most time and cost-efficient way to bring yourself into compliance with the law. It is a uniform process, and for that reason, it's not a negotiable agreement. There are standard terms and conditions, and we're going to make that available to you in the course of this webinar. You'll be able to see what the voluntary compliance agreement template looks like. It's a very streamlined and straightforward process where you undertake your own self-examination to identify unclaimed funds in which you or your business has no ownership interest, and then provide identifying information for those funds. There are uniform fields for completion that will kind of trigger you to what kind of information we require. And we invite holders to always give us as much identifying information as they have in their possession, because the more information that we are provided, the better able we are to validate ownership and return those funds to their rightful owner or owners. The self-examination that's referenced there up in the slide, please understand that we have our own division can support you in that process. We can give you guidelines, methodology about what efforts you should take and how you should approach it, and how, going forward, best practices to maintain your records to facilitate an easy and quick annual reporting to the Department of Commerce to meet your annual unclaimed funds reporting obligations. Can't say enough about this, and I think we're going to provide you with a lot of resources at the end of this webinar to rely upon. But we've had a very favorable from companies and holders that participate in the program about how advantageous it is to them to know that they can bring themselves all into compliance at once after having missed perhaps a number of years of satisfying their reporting obligation, and then have the benefit of knowing that they are held harmless from any liabilities arising as a result of the report and remission of those funds to us, and are relieved of their record-keeping responsibilities for their funds. Because once it's reported and remitted to the division and that report and remission is reconciled and uploaded into our database, we assume responsibility for maintaining those funds. And while those funds are in the Unclaimed Funds Trust Fund with Commerce, any interest that accrues on those funds is credited to the benefit of the owner or the claimant when they come forward to recover those funds. So it's a win-win for both the owner and for the holder. The voluntary compliance agreement, I can't speak highly enough about it.
Absolutely. Thank you, Kelly. And it's the program is growing year over year. So we used to only get about 5 or 6 of these agreements a year. Last year, we had 61 companies successfully participate in the program. They reported $689,000 to us last year. So as Kelly mentioned, it is the simplest, easiest way for you to come into compliance and then catch up on your reporting. So if we go to the next slide, there are some of the more of the benefits there. Kelly?
I think we've already kind of gone over all of them. First is that once it's reported and remitted to the Department of Commerce, you're held harmless from any liabilities arising from the report and remission of those funds that are made, any report and remissions that are made in good faith to us. There is a hold harmless provision by law. No fines, penalties, or interest are going to be assessed on account of the fact that perhaps the unclaimed funds that you're remitting to us through the voluntary compliance program should have been remitted previously some years ago. It allows you to catch up on your reporting in all one fell swoop rather than having to fill out a report for each year that you might have missed. You can do it through the voluntary compliance agreement. You can do a period of years. Most commonly, it's a 10-year period that's recited in the voluntary compliance agreement, and it brings you current for that entire time period. It is a factor for consideration in the for involuntary audit selections. Obviously, if we know you've done a good faith self-audit of your books and records, you're much less likely to be considered a good candidate for an unclaimed funds examination. And so I think that there has to be recognition that of the time and cost efficiency rather than having a potential outside auditor or state auditor coming into your offices to review your books and records. It's much easier for your own internal staff who's familiar with their books and records to perform the examination in an efficient manner. And as I said, we have supports. We have people here in the division who can answer questions and help you identify best practices and provide you with the forms that you need to complete to satisfy your reporting obligations. So there's a lot of interaction. It's not like you're on your own and you're just trying to figure out what does an unclaimed funds audit of my books and records look like. There are a lot of resources and support that can be provided to you through the division.
All right, so the steps to go through and participate in the program is to download the unclaimed or the voluntary compliance agreement form and the instructions from our website. Again, unclaimedfunds.ohio.gov. You see that on your screen. If you go to report funds, there's a section for voluntary compliance agreements, and that will take you to that web page. Again, you're required to go through and do the self-examination and identify any of those items that are dormant. You're required to do the due diligence mailing. And then once you determine the total unclaimed funds, you complete the agreement and sign it. Then you send it in to us. You can email it to unfdcompliance@com.ohio.gov. unfdcompliance@com.ohio.gov. And once we receive it, we will review the agreement, and then once it is signed by our division legal as well as our superintendent, we will notify you, and you'll have 60 days from that notification to report those unclaimed funds. If you are not approved for the program, we will notify you, and we do request that you do not report those funds until you do receive that notification from us. Now we are approaching that November 1st deadline right now. And so if you're thinking you might want to participate in the program, we recommend that you request a 120-day extension. And then go ahead. That gives you time to complete your review, to do your due diligence mailing, and then for us, it gives us time to review your agreement and to sign that and advise you of the next steps. All right. So let's take a look at the agreement. If you could please bring that up.
Great. Could we make that a little bit bigger? Great. Here, the first page, we're just going to give it gives you some preface, some instructions about the requirements and what must be done, as Georgia mentioned earlier, even when participating in the voluntary compliance program. You too, just like any other reporting holder, must perform due diligence, which means you reach out to the owners of the funds according to your books and records at the last known address of that owners to inform them that if they fail to respond within 30 days following the notification, the intent is to report those funds to the Department of Commerce as unclaimed funds. The voluntary compliance agreement, as I said, is very simple and straightforward. The first paragraph simply is identifying the parties to the agreement. There we ask the holder to identify themselves by name and address and state of incorporation. State of incorporation is important for those instances in which there is no last known owner address. And I don't want to go into detail right now about that, but that is relevant for reporting purposes, and we ask for disclosure of that from all holders. The first paragraph is simply an affirmation of one of the few disqualifiers from participation in the program, and that is that you're not currently under audit and haven't been noticed that an audit is impending. Then we ask for an identification of the funds by the nature, the property type, what kind of funds do you intend to report to the department under the VCA, and the period of time over which you have reviewed your records to determine those dormant funds that are properly reportable as unclaimed funds. There is a requirement that you detail the due diligence efforts that you've undertaken prior to reporting and remitting the funds to us, and whether it be through the due diligence mailing or through, in the event that you have no last known address, how you verified that you're unable to locate a owner address. And then there's an affirmation or sign off by the person at the holder affirming and acknowledging what efforts were taken to satisfy those due diligence notification requirements. And then, as George had stated earlier, after executing after the agreement is fully executed, both you've submitted it with your signature as the holder, it's been reviewed, and both myself and the division superintendent has signed off on the VCA, you'll be notified. And then within 60 days thereafter, you'll make a report and remission of those unclaimed funds. Upon receipt of the report and remission and those two things being reconciled, you will be there will be a release, a hold harmless from any liabilities arising from the report and remission. And then there's standard terms and conditions, simply identifying that this agreement is construed, interpreted, and enforced in conformity with Ohio state law. And as you'll see, then there's an acknowledgement in which you identify yourself, an authorized individual for the holder signs off and provides the tax identification number for the reporting holder. Very simple, very straightforward, not long and involved, but it is not subject to negotiation. This is a program that we offer. This is the terms and conditions under which you can participate in the program. Negotiability is not recognized or accepted as part of the voluntary compliance program. So that is the voluntary compliance agreement. As I said, there'll be a question and answer. If you have any questions about it, please feel free to post them in the chat.
All right. We do have an announcement. Hopefully, you may have heard of this by now, but we got a new system in February, and that means that you can more simply report electronically through our website with additional features. And so we are no longer accepting paper forms. So if you do send us a paper form, we will send it back, and you will be granted a 120-day extension. But we'll give you some instructions on how to file electronically. So we are paperless as far as our reporting. But as I mentioned, our system upgrade is here. And on the next slide, you see it's nothing like the Ohio Business Gateway. You don't have to have an account. You can just go onto our website, complete the electronic forms. If you have a NAPA format file, well, NAPA stands for the National Association of Unclaimed Property Administrators. It's a very specific format. It has to be the text format of it, and you can't just take an Excel worksheet and export it to a text. It won't work. It has to be in that NAPA format. But you can upload that, and then you can connect to the payment portal and file electronically through our website. You can also file your non-report directly online through our website. And if you don't have NAPA format, you can actually enter it into our website directly with the manual online reporting tool. So as I mentioned, we have new instructional videos. If you want to go to the website directly, it's com.ohio.gov/UNFD. If you go to our events page, there are videos there, but also that you can also connect to our resources and guides through that as well. You can also go to unclaimedfunds.ohio.gov, and there's that link for the guides. So there are all kinds of resources to help you to report, but we hope that you find it simpler and easier to do this year. And I think we have some time for some questions. If you have any questions, if you would please put them in the Q&A.
We have a lot of questions, some great questions today. We will start with If we currently have 0 unclaimed funds, do we still need to enroll in the voluntary compliance agreement if we've never filed before, or just submit our first none report by November 1st?
Thank you. That's a great question. We get that a lot. So the voluntary compliance agreement is more geared toward reporting funds, dollars. So if you have nothing to report, then you can just go ahead and file your non-report. Like I said, we don't automatically assess fines and penalties. We prefer not to punish in that way. So if you just have a non-report to file, just to go ahead and do that. Just file one report for that, and then going forward, you'll be required to continue to report, but you don't need to do a voluntary compliance agreement for that.
And it's funny that you say that, George, and that's one thing I don't think we really mentioned. With the voluntary compliance agreement, one of the requirements is that you acknowledge that you have a duty thereafter after you enter into the voluntary compliance agreement. We don't want obviously regular compliance is important to us, and so if you once you enter into the voluntary compliance agreement, and it may bring you current after a number, maybe be your first time ever reporting, and it may bring you current for a period of years. Then on an annual basis, there's an acknowledgement that you have an annual duty to review your books and records and report to us annually on an annual basis. So there is that acknowledgement and undertaking as part of the voluntary compliance agreement itself.
Okay, next question. What if funds belong to someone outside of Ohio with unknown address?
In the state of Ohio, if the owner's last known address is here in Ohio, then it's properly reportable to the state of Ohio. However, by statute in Ohio, an Ohio holder can report to us with all the identifying information that they have, whether it's that there is no owner owner address, and you validated that, or even if they're in another state, because we have a relationship with all of 50 other states to reciprocally report to those states based on the last known address of the owner to those other states. So if you reported to us a property that belonged to a West Virginia resident, we would reciprocally report that to the state of West Virginia. George, do you think I
Great.
answered that question? Is there anything
I think
you
you
have
did. I think you did. Yes. And just to note as well, even we do require that you provide as much owner identifying information that you have available in your report, because that will facilitate reuniting the owner of the money with their funds. Um, but if you don't happen to have their social security number, or if you don't happen to have their birth date or their address, you can still report that under unknown, or even if you don't know whose money it is. But that's the only other thing that I would add is you can still report that. Just report as much owner identifying information that you have, or report unknown if you don't have it.
Next question. We recently conducted an audit and found uncleared tenant refunds from a prior years in an old accounting database. We have conducted our due diligence and now have funds to report. We previously filed none reports in those prior years. Would we be subject to penalties should we complete the VCA?
I recommend completing the VCA because you do have funds from prior years to report, and the VCA will give you the benefit of being uh, relieved of any fines or penalties. Like I said, we don't automatically assess, but you would be a good candidate for a voluntary compliance agreement. Kelly?
I wanted to kind of I'll poke the bear a little bit here. Would it be appropriate also to amend their prior reporting?
They could also do that. That would be another option, uh, depending on how much and how far back it goes. It might be advantageous to do that, or it might be advantageous to participate in the voluntary compliance agreement. You're always
So,
welcome to reach out to us
yeah,
if you're not sure. The phone number is there on the screen, 614-466-4433, or reach out to us directly by email.
because then we can talk about what would be the most economical way for you to correct it and make sure that the funds are properly reported.
If you file a VCA, do you include 2025 or file 2025 by 11/1?
So if you were to sign up for a VCA right now, It would be the 2025 report. And as I mentioned, I recommend that you request an extension so that you can complete that process. You wouldn't need to file a separate report for 2025 in addition to your report for the voluntary compliance agreement.
Because the reporting periods are by the fiscal year. So for the reporting period ending June 30th, we get a report November 1st. For that reporting period.
What would cause the VCA to be denied?
One thing we often do is if someone requests a VCA for $0, again, we just advise them to we deny the VCA, but we advise them just to complete a non-report. If they've been selected for audit, that would be another reason.
If they have attempted to alter the terms and conditions of the VCA, I've had that happen, and as I explained earlier, that this is a uniform program, and the voluntary compliance agreement is uniformly administered among all holders. Obviously, you saw where there is specificity as to the nature of the funds and the period of time of which you've conducted the self-examination, but we've had instances in which holders have tried to materially alter the terms and conditions in a way that we don't permit, and for that reason, they've been denied.
What if you know the owner is deceased?
A lot of unclaimed funds are reported to us. They become dormant because the owner is deceased. That's a common claim, is the heirs or legatees of the deceased owner claims the funds that belongs to the decedent. So that is common, and they're reported to us. As far as due diligence, usually you're reaching out to, and George, you who have a lot of audit experience in this as well, the owner's last known address, if you are able to contact the executor or administrator of the estate, that is basically the legal representative of that deceased owner. And they can act as the owner would to indicate a continuing interest in the funds.
So you are still required to do the due diligence mailing. You are still required to report those, but you would report them in the name of the decedent, or it could be a joint ownership with the decedent and then the beneficiaries, depending on how you report it. But they are still eligible to be reported.
Okay, we have a few more questions here. If the company is in the process of changing the incorporate state, should we use the old one first when filing VCA or use the new one going forward?
Changing what?
The
The state of
incorporated
incorporation?
state? Mm-hmm.
Well, okay, so it's as of the date of filing, what is your state of incorporation? It doesn't matter so much if you have money that belongs to, but according to your books and records, Ohio residents, and you report to the state of Ohio, irrespective of your state of incorporation. The times at which state of incorporation become relevant are in instances in which you have no last known address for the owner, and then it would, in the absence of knowing where the owner is located or where their state of residence is, then you would report to the state. Then you would report the funds to the state of incorporation for the holder. So as far if you're a holder and you're changing your state of incorporation, if you have funds that you know belong to Ohio owners, irrespective of what your state of incorporation is, you would still report that to Ohio. George, anything to add?
I think you covered it. The only other thing that popped into my mind is if there was a change of ownership in the company, then there are guidelines in there regarding who is required to report those funds. That might be a little off topic from that particular question.
So if there's additional detail, likewise, I would encourage that the individual who asked that question to contact us via email or phone Because if you're a holder and you're closing out your books and records and transferring ownership, then there should be a final report under the entity that is terminating its existence.
We have another good question. I'm sure this comes up a lot. Someone said they would love to be able to create multiple accounts. They have more than one business and each has its own email. However, I can only have one OH ID, which causes business correspondences to come into the wrong email. Is it possible to direct any actions or receipts to the proper email easily?
Well, when you report to us, each holder account has its own contact with its own email. You can have the same contact with all of those different companies. As far as the Ohio ID, you don't have to have an Ohio ID to report through our website. So I recommend that, and that way we'll have your preferred contact information so that whenever we send out information about webinars, reporting information, or whenever we contact you back about your voluntary compliance agreement, we'll be sending it to the right place. Kelly, do you have any thoughts on it?
Yeah, I have a question actually for you, George, and I wish I could talk to the person asking the question. But if you have the same Ohio ID, does that mean it's the tax? I mean, what's relevant is the tax identification number for these business entities, if they're the same or different. And if you have the same Ohio ID, does that mean you have the same tax identification number for all these related entities?
Not necessarily.
No, right, no. So that's what's relevant to us is the tax identification number. We want that to be disclosed for each respective business entity and holder who would be submitting a unclaimed funds report to us.
Tim asked, I was curious as to the percentage of current compliance on filing of reports annually.
I do not happen to have that. We're right in the middle of our reporting season. I can tell you that there's over 1 million companies in Ohio, and I wish everybody would report. And so I'd love to be able to get out and audit everybody, but we can't do that either. The best thing that you can do is to, if you haven't reported or if you've underreported, and there's lots of different reasons for that, but the best thing you can do is to reach out to us and participate in the voluntary compliance agreement program. When I get that information, we might be able to make that public, but like I said, it's constantly changing. But it's definitely our goal to help every holder, every company report annually and fulfill their requirements under the law, so that we can reunite the people with their money. That's why we're here.
And just to follow up on what you said, George, I mean, that is a lot of significant change has just happened with the division within the past few years. Most notably, earlier this year, we implemented a new data management system. And one of the primary reasons that we did so was that it increased our ability to reduce our paper dependency and to enable claims and holders reporting funds to us to be done in a paperless fashion and online. And Georgia talked about the fact that we're not going to be having paper holder reports going forward. In that way, the ease for both the holders and for the division to manage the reports and to respond to them is significantly greater. And for that reason, I think compliance will be easier also to monitor and to enforce.
Okay, we have 3 questions left. If you have 0 unclaimed and never reported, but then file your first negative report without doing the VCA, will the state then audit the company?
Not necessarily. We're actually required by law to select at random for our in-state audits. We are allowed to join in to audits of companies that are in other states that have been initiated by other states. But for our audits that we conduct, it's random. So the only time that comes into play is that we select the company at random, but we also look at the type of the company, the size of the company, the reporting history to see if it makes sense for us to go in and take a look. You'll be a lot less likely to be audited if you are reporting. I can tell you that, but you will not automatically trigger a red flag if you haven't reported and then you go ahead and submit your first non-report.
Right. It's a random process. However, if you have customers who feel that you're not satisfying your obligations and they make a complaint, that would be an exception to that general rule, because obviously if we have Ohio taxpayers who are raising objection to a particular holder in the handling of their money and believe that they're not reporting, we're going to investigate that.
Okay, we have a OBG question. I'm logged into my Ohio Gateway right now. There's no option to submit negative reports for past years.
Okay. All right. So you might need to add the unclaimed fund report and unclaimed fund negative report to your dashboard. So I recommend giving us a call and we can walk you through on how to do that. Or you can just log on to our website and you can submit your report directly through our website without having to go through the Ohio Business Gateway. Either way, we'll get you there.
Okay, what is the process for reporting unclaimed safe deposit box content? After submitting a report of the contents, when do we need to send the content?
So when you're required to submit your report by November 1st. And then also any of the liquidated money or any of the other funds associated with that report, you're required to send by November 1st. As far as the physical contents, you should contact the division to make an appointment to drop those off. And that will be an appointment after January 1st. So give us a call and you're going to want to talk to our accountability section. And they'll help you out.
Okay, we do have a couple more questions that came in. Presuming at least one unclaimed fund rather than a none report is required, but business is a law firm, how is compliance with this not breach confidentiality when the name of the owner is the client?
I'll take that. If this is money that's held in the Ulta account, there are specific reporting requirements. We have a specific statute for how these properties are coded, and there are also provisions in our in the unclaimed funds law that allow that provide for variances as far as the amount of the information, the identified information that you have to report about your clients. So for that reason, if I can, I'd like to speak specifically to your situation. If you could contact me at the email address that was provided in the slide deck, I'd like to talk to you more in greater detail about that. But there are specific provisions in place for attorneys who are reporting unclaimed funds, whether it be, which I would expect this is going to be IOLTA funds. Want to walk you through that.
Okay. Should you report prior year negative reports if you did not report the prior year reports?
No, you're not required to, if you're just reporting negative, to go back and submit a report for every year that you haven't reported. We just ask that you do submit your report this year and then continue as you go forward.
Oh, I think that appears to be all of our questions at this time.
All right. Well, thank you all for joining us and hanging in there to this point in the presentation with all the questions. We will be sending out the slide deck and we'll be making a copy of this recording available on our website, com.ohio.gov/UNFD. It'll be on I think the events page. And, if you do happen to have any other questions, feel free to reach out to us. But thank you very much for joining us, and we appreciate your interest in the Voluntary Compliance Agreement program. Have a great day.
Thank you for your time.